What's going on, everybody? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In today's video, it's going to be quite a long one. We are going to go through the whole dividend portfolio. For some of you that don't know what my portfolio is currently holding, we've been just doing updates these past couple of weeks, but today's going to be a long video. We're going to go through each and every holding and look at how I am doing in each of them. So if you guys are hyped for this video, please go grab a snack, grab a drink, and let's get into this video. Make sure you smash that like button. Make sure you subscribe to the channel. I really do appreciate that. And let's hop right into the dividends. So this past week, it's been a great one for us. We were up over 4% for the week, which is $1,100. In the past month, we're going on up almost 11.5%, which is almost $2,800. So awesome to see there. Now let's hop right into the dividend portfolio. So first up, we have realty income. Currently sitting at 64.03 shares of realty income. Our average cost is $65.86. I am down 1.35% on this position for a total of about $57. This is about almost 16% of my portfolio, so it's pretty high there. Definitely not going to add any more anytime soon, but we definitely want to add more to other stocks before this one. But they do pay a monthly dividend, which we will be receiving their next one on November 15th. You guys will see all my dividend income for the month of November in a later video towards the end of the month. But this is realty income. It's currently sitting at $64.97 at the time I am recording this video. So we are down a little bit on this position. For those of you that don't know, Realty Income is the monthly dividend payer. They are a REIT, and they invest in different types of real estate from different stores such as Walgreens or LA Fitness. They hold different properties in their portfolio. So we're going to go back to the next one, and we will take a look at the next stock. So the next one is Intel, ticker symbol INTC. Now this is by far my biggest losing position in the portfolio, but I am collecting that dividend every single quarter, and I'm also selling covered calls on this stock. So my average cost is sitting at $47.74. I got in on this one way too early. It's just been taking a nosedive. It's down over 40% in the past year alone. I own 106 shares of Intel for a portfolio diversity of about 12.3%. I'm down 36.5% on this position, which is $1,850. Intel was trading around $25 at one point a couple of weeks back, but now they bounced back to $30 or so. This one I think is a long-term hold, and I do think it will be a good dividend payer. For those of you that don't know, Intel, they manufacture computer chips and computer products. Their biggest competitors are NVIDIA and AMD. They are a semiconductor, but I do think Intel is going to bounce back, and they do offer a pretty awesome dividend, which I will be receiving on December 1st for $38.77, which will get reinvested back into Intel. But let's hop back over to the portfolio and get ready for our third stock in the portfolio, and that is none other than AbbVie. So AbbVie is currently my biggest gainer in the portfolio. Ticker symbol is ABBV. It's currently trading at $149.80, and my average cost is $117.65. I hold about 15.6 shares of AbbVie. It's almost 9% of my portfolio, and I'm up about 27.3% on the position, which is just about $500. So for those of you that don't know, AbbVie is a pharmaceutical, and they engage in the development and sale of different pharmaceutical products. If you guys don't know anything about AbbVie, you should go check them out. They are one of my favorite stocks, and I definitely would love to have more of AbbVie, but right now I just want to maintain that average cost. They do offer a pretty nice dividend yield. As you can see here, I will be getting paid a dividend on November 15th for $21.97, and that's for holding just about 15 shares. Next up, the fourth stock on the list in the portfolio is QYLD. Now, if you guys don't know what QYLD is, they are an ETF, covered call ETF that offers a pretty high dividend. So I do own 154 shares of QYLD. My average cost is $19.65. QYLD is currently sitting at $16.43, so another big loser for me, down about $500 and about 16%. It's sitting at just under 10% of my portfolio value. And QYLD offers monthly dividends. Pretty high dividend, is definitely an income play. So I am okay holding these shares. And each month I will gain about almost 2 shares, about 1.5 shares of QYLD that will get added to the portfolio every single month. So pretty good there. And we will just keep building this position with the reinvestment of dividends. I won't add any more of my own capital, but the reinvestment of dividends will build this position out, and hopefully eventually it will pay me $50, $60 a month just in this position alone. The next stock we are going to go over, which is the fifth stock in the portfolio, is none other than Apple, ticker symbol AAPL. Apple, I own 23.1 shares. It's about 13% of my portfolio. I am currently down about 2.7% on the position, which is $96.50. My average cost is $153.61. Apple's currently sitting at $149.43. So Apple needs no introduction. I definitely want to add more to Apple. I would love to get this to eventually to 100 shares. Maybe a while before I do that, but I would love to have this one sitting at over 100 shares. That way I could start selling covered calls on it. It would be really ideal for me, and I just really looking to keep building this position in Apple. They offer a small dividend of about 0.6%. So very small, but I think they will keep increasing this over the years and eventually become a pretty big dividend payer. But that's just my opinion. This is not financial advice. Next stock we are going to go to is Ford. Ticker symbol is F. I currently own 102.5 shares of Ford. My average cost is $16.15. I am down about 10% on the position. It is about 5.7% of my portfolio. Ford, they are really getting into EVs. I think I'm very bullish on Ford over the long term. I think my average cost is a little bit high. I would like to bring that down a little bit, but I currently am selling covered calls on Ford because I have over 100 shares. I did last week have to buy my covered call back because I had it for $14.50 and it did finish above that mark. So I did have to buy that covered call back. So I did not make any money on that covered call for this month, for this week on Ford, since the market has been rallying pretty well. But that about sums it up for Ford. Next up, we have Microsoft. So Microsoft is definitely a new position in the portfolio. I currently only own 5 shares of Microsoft. My average cost is $239.02. I am up about 3.4% on the position, which is about $40. It is still under about 5% of my portfolio. So not too bad there, but I definitely would like to add more to this position. Microsoft, it is an expensive stock for me, but I really do like the company, and they have a 1% dividend yield, so not too bad there either. Moving on, Microsoft needs no introduction. We have Starbucks, ticker symbol SBUX. Starbucks, I currently own 30.4 shares of Starbucks. It's about 11.3% of my portfolio. I am up about 10.45% on the position, which is about $280. My average cost is sitting at $88.09, and it's currently trading for $97.30. So not too shabby there. I was down on this position for a while at one point, and this one just really shot up. Starbucks, I will definitely add more once it gets closer to my average cost again. If I could add more in the $90 range, I will be pretty happy with that. So I am receiving a dividend from Starbucks this month for $16.13. They do offer just about a 2% yield, so pretty good there as well. Next up, I believe this is another new position for me in the portfolio. It is Target. Ticker symbol is TGT. I currently own 10 shares of Target, which is about 6.6% of my portfolio. My average cost is $150.74, and Target's currently trading at $173.31. I am up about 15% on this position, which is $225. It's pretty cool because I did just buy this position last month, so it's pretty cool to see. The dividend yield is 2.18%. And it's pretty cool to see that amount of capital appreciation that quickly. I'm going to hold off on buying more Target for now, but if it does come back down, I will definitely take the plunge and buy more Target. This one is a dividend king, by the way, which means they've increased their dividends for over 50 years. Next up, we have JP Morgan. Ticker symbol is JPM. We're getting towards the end here, I promise. So make sure you guys are still paying attention. If you are, please make sure you smash that like button. But we hold about 13.6 shares of JP Morgan, sitting at about 7% of the portfolio. We are up almost 10% on the position, which is $164.12. My average cost is sitting at $123.45 and is currently sitting at $135.50. It's pretty good there. I really like this stock. They have a nice dividend, almost 3% dividend yield. Pretty decent there. I am very happy with the size of this position currently. Would like to maybe add more if it dropped again, but pretty happy with this position overall. Next up, we have ZIM. Ticker symbol is ZIM. This one I bought way too early. I'm down a substantial amount on this one. I only have 11.5 shares, but I am down over 55% on this position. My average cost is $60.56 and down 55%, which is about $384. It's only about 1.2% of my portfolio. They do pay a nice dividend, but I definitely bought in this one way too early. Honestly, I think ZIM is undervalued at the moment, but I definitely got in on this stock a little bit too early. They are a shipping company. For those of you that don't know, they come out of Israel, and they've been around for quite a while. They were founded in 1945. They just did recently IPO. See, maybe within the last 2 years. Yeah, last year they IPO'd. So they IPO'd at $11.50. It ran all the way up to over $80 at one point, and I kind of bought it on the way down, which is upsetting to see, but their dividend is pretty nice, so we're going to see when that one comes in again, see how much we get. Last time I think we got like a 12, maybe even $17 dividend, I think, from holding 11 shares, so not too bad. And the last stock that we add to every single week is SCHD. So this is a fairly new position, but I add $75 to this stock every single week. My average cost is sitting at $71.12. I own 11.6 shares of this position. It's only about 3.4% of my portfolio. I'm up over 8%, about 8.5%, which is almost $70. I definitely want to add more to SCHD. This is a dividend ETF, and it has outperformed the S&P 500 over the long term, so we're really happy with the performance of this one, and I would love to get more. Like I said, this is my weekly purchase that I'm doing right now. Definitely hope to get that more up. I do about $75 every single week, which I was getting over 1 share per week, but now it's going to be less than 1 share if the price stays at this point. But SCHD, everyone go check it out. So that's going to wrap up the dividend portfolio. We're going to hop over to the spreadsheet now. Almost done with the video, I promise. Let's take a look at the spreadsheet. So our cost basis, we're sitting at just under $28,000. Market value sitting just over $26,000. We are down about 6.29% on the portfolio, but it's better than it's been. We were down at 14%. So we're really beating the S&P 500, so I'm very happy with that. And we are getting back to the green, hopefully, in this portfolio. My dividend yield is pretty high, 5.19. Yield on cost is 4.87. And I think when these do increase in price, these stocks that I'm holding, the dividend yield will definitely come down and become more of an average yield. I'm looking to aim for about 4.5% on my dividend yield. I have total annual income of $1,359.96, which turns into about $113.33 monthly, $26 weekly, and almost $4 daily. Currently, we have a little bit more than this, but so far this spreadsheet saying $911.55 on the year in dividend income. It's definitely been more. I will do a calculation at the end of the year to go over all of the dividends that I've made in the portfolio, because when I switched spreadsheets, some of the dividends got lost in translation, so I wasn't able to recover those. But we will definitely do a huge dividend overview at the end of the year and see how much we've actually made from dividends. Very excited to see that. Take a look here at my cost basis and gains or losses. So the one that sticks out the most to me is Intel. Definitely down a pretty penny on that. But most of these are getting towards the green, which I'm very happy about. Realty Income almost there in the green. AbbVie's doing really well. We have Apple's almost there in the green. Ford got a little bit to go. Microsoft is in the green. Starbucks in the green. Target in the green. JP in the green. Zim, I have a long ways to go for that, but SCHD is in the green. So very happy with those positions here. Definitely need this Intel one to come up a little bit. So, unfortunately, like I said, we weren't able to make any covered call income for this week because we did have to buy them back. So we are still sitting at $10 for the month of covered call income. So this one is definitely going to be a lower month, but that's okay because the market is really rising. So that's really why it's going to be a lower month. But let's take a look at the diversification. I don't know if I've shown you guys this on the spreadsheet yet, but we have about almost 25% of our portfolio sitting in real estate. We have almost 40% in information technology, almost 14% in healthcare, about 20% in ETFs, and then almost 2% in industrials. We definitely have too much in real estate. We have information technology is definitely a little bit too much, but that's just because I'm holding Intel, Apple, Microsoft. Those are my big three. So we definitely need to really diversify this portfolio a bit more because this is too big of a pie. I am a very tech heavy person, so that is why these stocks are really, this diversification is this much for information technology. But that's going to about wrap up the video here. If you guys did enjoy it, please smash that like button. I really do appreciate it. Also, join the family, hit the subscribe button. We post here at least once a week, and you get a video just like this one to stay updated on my dividend portfolio. Let me know how your dividends are doing for you in the comments down below. I really appreciate you all for watching, and I'll see you in the next one. Peace.